Hi everybody, welcome to a brand new episode of Finance by Charcha, and this week the Charcha is going to be on banking sector. This particular video is to try and help you demystify how does the banks work, what are the things that you have to understand around banking as a sector, and what are those nuances that you look at before you end up picking a banking stock. My guest today is Mr. Ashwini Agarwal. He is a CFA, he is a banking sector analyst and a fund manager with Edelweiss Mutual Fund. This time around, we are going to do this episode slightly differently. We are going to split this episode into two. The first half of the episode is going to focus on me personally explaining to you all some very basic concepts around banking as a sector and a business. And then in the second half, we'll cut across to my conversation with Ashwini. The idea to do this is because once you understand the basics around the sector, I think you will be able to appreciate Ashwini's input and wisdom on the banking sector far more than you would have otherwise done while you watch the conversation between me and him directly. So with that intent to help you a little better and make concepts slightly more engaging and detailed for you, allow me to start off and then we'll cut off to the conversation with Ashwini. Okay, awesome. Now, all of y'all know how does a bank typically operate, right? A bank is in the business of borrowing money from the market, then lending it, and the difference we are saying is the margin or the profit that the bank makes. So say for example, if the bank is borrowing money from the market at 6% and the bank lends that money at 8%, then we will say that the bank made a profit of 2%. The banking business is as simple as that. But there are a lot of nuances that go into making the bank profitable or sustainable. I'm sure all of you all will agree with me when I say that while you end up giving money to a bank, you are expecting that the bank will 100% give your money back with interest, right? So risk management is extremely significant while you are talking about bank as a business or while you are trying to evaluate bank as a business. So while I'm trying to explain to you the banking sector, the first part that I really want to explain to you all and help you all understand is how the risk management process happens. So let's say for example, if the bank borrows 100 rupees from the market, lends the entire 100 rupees, but unfortunately what happens is out of these 100 rupees that the bank lent, the bank could not get back 6 rupees from the market because there were some people who defaulted on the loan. In this example that we are discussing, this 6 rupees that did not come back will ideally be a loss for the deposit holders because the entire deposits that were received were lent, right? And from that money 6 rupees didn't come back. So the bank is not going to be able to pay that 6 rupees back out of the 100 plus interest that it was supposed to pay. Now this is not what you are expecting from the bank, right? What you are expecting from the bank is 100% your capital plus interest coming back to you. So how does RBI make sure that something like this does not happen and the bank does not default on the money that the bank has taken from the deposit holders? So what RBI has done is RBI makes sure that if the bank has 100 rupees to lend in total, this entire 100 rupees is not only depositors' money, right? It comprises of three things: equity, and I'll explain this to you, risky assets, and the third is the depositors' money. Depositors' money. Now what do I mean by this? Banks, RBI says that if you've got 100 rupees to lend, right, or if you want to accumulate 100 rupees to lend, make it a combination of these three. So RBI says do one thing, sell some shares in your company, right, and raise money from the market. Let's say the bank sold 10 rupees worth of shares and borrowed and raised 10 rupees from the market. Then you would have heard of terms like perpetual bonds, AT1 bonds, tier 2 bonds, tier 1 bonds, and all of those things. Now these are risky assets. Anybody who's investing in these products, they know for a fact that it's not like a bank fixed deposit. If they are investing in those assets, then you probably might end up losing some part of that also. You saw that happening in Yes Bank or in Lakshmi Vilas Bank. So you saw that happening in Lakshmi Vilas Bank, right? So RBI says that raise some money from investors. When those investors give you money, they know that they are taking some risk, right? And get the remaining amount from the depositors' money. So please understand, if the bank is lending 100 rupees to the market, that entire 100 rupees is not depositors' money, right? These are hypothetical examples. It will be 80% from the depositors, 10% from those perpetual bonds, tier 1, tier 2, where the investors know they can lose capital, and equity where you know you can lose capital, right? Now let's say, for example, as a bank, if you've lent 100 rupees, now this 100 rupees I'm talking about, and 6 rupees does not come back, it does not hurt the deposit holders, because this 6 rupees will be lost by these guys first, right? So this is how the RBI makes sure that when as a bank you are lending, it's a combination of risky plus risk free, so that even if there are defaults, these guys lose money first before these guys end up losing money, right? This is the first risk management process that the bank or that the RBI has in place. Now you would say that if there are 100 rupees, if there is 100 rupees that has to be lent, what is this risky assets that we are talking about? This risky asset at the time of recording this video is 11.5%, which in the banking language is called the CAR, capital adequacy ratio. So you will see this getting quoted time and again in any commentary that you will hear about in the banking space about what is the CAR of capital adequacy ratio of a bank, because it's extremely important, because this is the risky, this is this equity plus the risk asset that I'm talking to you of, which the bank has to maintain at a minimum 11.5%. So typically what happens is, more and more riskier lending that the bank keeps doing, and the more the risk that the bank takes, the CAR ratio of the bank keeps reducing. And because the minimum is 11.5, every time the risk increases beyond a certain level, RBI will push the bank to sell more equity or raise more money through these risky assets, because will have to bring back the CAR ratio back to 11.5. So please understand, if as a bank I'm lending 100 rupees, it's a combination of borrower's money and some risky money that I have raised by selling equity or by selling perpetual bonds. So whenever a default happens, the first loss is absorbed by the equity holders and the risky asset holders. The minimum requirement, like we understood, that RBI has kept is 11.5, which is called the capital adequacy ratio. That's the first risk management process in place, so that the deposit holders don't lose money. The second risk management process in place is something called as SLR and CRR. You would have heard of these terms quite often in RBI policies as well. SLR stands for statutory liquidity ratio. CRR stands for cash reserve ratio. Now what the RBI does is, RBI says that if you, let's say, have 100 rupees to lend, right? If you have 100 rupees to lend, and this is typically NDTL, it's called net demand time liability. In simple language, you call it the total deposits that the bank has, which is this component. So let's say if this component now is 100 for simplicity's sake and not 80, right? RBI says that if as a bank you have 100 rupees to lend, as a bank, if you have 100 rupees to lend, I will not allow you to lend that entire 100 also, right? From this 100, right, you will have to keep roughly 20% aside and compulsorily buy government bonds, treasury bills, SDLs, GSECs. You will have to compulsorily buy 20 rupees out of the 100 rupees that you have of SDLs or GSECs or treasury bills from this 100 rupees, compulsory. That 20% or 20 rupees that is going to buy these government securities is SLR, statutory liquidity ratio. Compulsory from the depositor's money, or NDTL like you call it, you will have to keep aside 20 rupees for SLR, on which you will definitely earn some interest, but you will not be allowed to lend that money, right? Second is CRR. let's say 4%. Out of this same 100 rupees, right, NDTL or total deposits, whatever you want to call that as, you will keep 4 rupees or 4% with RBI. On this 4%, RBI will not give you any interest as such, right? But it's a safety bucket. So tomorrow, if anything goes wrong, you have this 4 rupees that you can take from RBI. You have these 20 rupees of investments that you've made in the government securities that can be liquidated to take care of any unseen or unforeseen event that occurs that trouble you to run your business as a bank. So please understand, if I have 100 rupees, right, I already have some part of it as equity and risky assets. So if there are defaults that are going to happen, the first brunt is going to be taken by these guys. And from the remaining amount, which is the depositor's money that I'm going to lend, I am still not allowed to lend the entire depositor's amount. I have to keep 20% aside in SLR, right? I have to keep 4% aside in CRR, which means even out of the depositor's money, I will only be allowed to lend 70-75%, and this number keeps going up and down, is what I'll be allowed to lend. And hence what you want, or what I want you to understand is that if I borrow 100 rupees at 6% from the market, my break even is not 6%. My break even is much higher than 6%, because I can't lend this entire 100 rupees, because out of this 21 rupees I'm keeping as SLR, 4 rupees I'm keeping at CRR, I'm only lending 76 rupees, right? And hence, even if my borrowing is only 6%, and if I'm lending at, let's say, 9%, it's not necessary that I'll make 3%, I might just make 0.5%. So very quickly, what I want you to understand is 2 risk management processes that RBI has to make sure that the bank does not go bust. RBI says that you should have raised equity money from the market. You should also raise risky assets. परपेचुअल बॉन्ड्स बेचो, मार्केट से पैसा रेज करो, और बोरोवर से पैसा लो. ये तीनों मिलाकर आप लेंड कर सकते हो. सो व्हेनेवर a default happens, the equity guys and the risky asset investors lose first. And from the depositors' money also, it does not allow you to lend everything. You have to keep SLR and CRR aside. Very basic but extremely important risk management processes that you have to understand, basis which the bank as a business operates. Now let's assume that the bank has borrowed 100 rupees from the market at 6%, and assume the lending rate is 8%, and for simplicity's sake, let's assume 2% is the profit that the bank makes. Now I want to explain to you all a lot of terminologies that are important for you all to understand banking as a business. First, when you borrow this money from the market, where can you borrow this money from? So you say, as a bank, you borrow money from current account, savings account, fixed deposits, recurring deposits, so on and so forth. So this 6% is the average interest that you will have to pay from everybody that you borrowed money from, right? Because this money does not come to you free of cost. So this 6% is called the cost of liability. It's a liability for the bank. The bank has to pay this money back, and hence you call this as cost of liability. So the rate at which I've been able to borrow money from the market as a bank is called the cost of liability. Currently, in our case, the cost of liability is 6%. And I'm sure it's a no-brainer that lower the cost of liability, better it is for the bank, is because you will be able to make more margins, right? Now, if the bank wants to reduce the cost of liability, right, so that they can make more profits, what the bank has to do is increase the amount of deposits in current account and savings account. Because let's say if the FD and RD pays you 7% as interest right now, current account pays 0 and savings account will pay 3.5, right? I'm sure there are structures around current account also paying, but the ideal point is current accounts and saving account is the cheapest form of borrowing that the bank can have. So if the bank wants to reduce the cost of liability, the bank will try and increase the deposits that it receives in current account and savings account. That brings us to the second very important understanding, which is CASA. You will typically have banks reporting CASA number. Let's say CASA is reported as 42%. What that means is that out of the total deposit that the bank has, 42% of the deposits have come from current account and savings account. Now, the higher the CASA ratio is, it is good for the bank, because if this from 42 becomes 60, you will suddenly see your cost of liability, the rate at which you borrowed money from the market, will come down from 6% to 5%, right? So we've understood two things right now. We said CASA and we've understood cost of liability. So as a bank, you borrow money from the market, lend to the market, and you make 2% interest as income. This 2% that you've made as interest, let's say this is 100 crore rupees in total, right? So let's say whatever, you borrowed some 1,000 crore, these are random numbers, you lent some 12,000 crore, and because of the 2% profit, you made, let's say, 100 crores of profit. This 100 crores of profit in the banking language is called the NII, right? It's called the net interest income. So it is the difference between the borrowing and the lending rate, the interest income that you've made, NII, is 2% in this case that we are understanding. Please understand, this is not the net profit or the total profit of the bank, right? Because bank does a lot of other things than just borrowing and lending. But NII will tell you that from the main business, which is lending and borrowing, how much profits have you made. So if the NII is 100 crore, you know from the core business of banking, the bank has made 100 crore of profit. Remember, net interest income. It's a no-brainer that higher the net interest income of the bank, the better it is for the bank. There is this one more term that you have to understand, which is called the net interest margin. It's like profit margin in any other business, right? So I am saying, what is the total interest income that I made divided by the total loans that I gave out. The formula is not exactly correct, but this is what NIM means, right? So let's say if the total interest that I made was 100 crore, like we understood in this example, and let's say 1,000 crore is the total loans that I had given. So I will say my net interest margin is 10%. Right? It's like I said, it's like a profit margin in any business that you have, that you made 100 crore of profit by lending 1,000 crore rupees. This is called NIM, net interest margin. Again, it's a no-brainer that higher the NIM is, right? It shows that your profit margins as a bank are better. So you've learned 3-4 concepts so far, right? We said CASA, which is current account and savings account. We said that lower the CASA, it is better for you. We understood cost of liabilities. We said that's the rate at which you borrow money from the market. Again, lower the cost of liability, better for you. Sorry, the CASA, higher the better for you. My apologies. Cost of liabilities, lower the better for you. Higher your net interest income, which means you've made more monies. Net interest margin, higher the better, because it means that you've made more profit margins, right? Now let's say, for example, we said that the bank borrowed at 6% cost of liability, bank lent at 8%, and bank made 2% profit. We said this was cost of liability. We said this was the lending rate, average lending rate, and we said this was the net interest income or net interest margin, whatever you want to use that as. Because it is written in percentage, I will say, let's say this is the net interest margin. Right now we are saying, how does the bank grow or make more monies? So in the banking business, if you want to grow and make more monies, right? You can do it in two ways. Either reduce your cost of liabilities so that your net interest income or net interest margins go up. How do you do that? We understood. Try and increase your CASA. आप अगर अपना कासा 42% से 60% लेके जाएंगे, ऑटोमेटिकली आपका कॉस्ट ऑफ लाइबिलिटी गिर जाएगा और आपका नेट इंटरेस्ट इनकम या नेट इंटरेस्ट मार्जिन बढ़ जाएगा. So that's one way to make more profits. Another way to make more profits in the banking business is lend more. That is what you call as advances growth. What is advances growth? Let's say if I say advances growth was 20%, what does this mean? This means that if the last year this bank gave out loans of 100 crore rupees, then this year this bank gave out loans of 120 crore rupees. Now please understand, it's a no-brainer that if you are lending more, you will make more income, right? And which is why while you are looking at banking as a stock, this is also a very important parameter that people look at as to how much more is the bank lending, right? Is the advances or giving out of loans growing? And if it is growing at what percentage, right? So advances growth is another interesting and an important data point that you look at, so that you understand that when I say in a normal business sales is growing, in the banking business you say advances growth grew by 20%. Now whom do you typically lend out to? So you will hear another two terms called retail loans and you will hear wholesale loans. Retail loans, like the name suggests, these are loans that you give to somebody to buy a house or a bike or a car. Wholesale loans are typically loans that you give out to larger corporates, right? Now, of course, there are different times where you will have to be very careful whether or not if banks are lending more to retail or banks are lending more to wholesale. How is the macroeconomic environment? That will help you understand whether or not do you want to buy a bank that is lending more to retail or want to buy a bank that is lending more to wholesale. But that's too deep for you to understand to start with. But please currently understand advances growth means that you are lending more, doing more sales, right? And that's a good thing. But typically what comes along with lending more or doing more sales in the banking business is NPS. So when you apparently start lending more, there are probabilities of more defaults also, right? So how do you term this or any loan as a default or an NPA? So in the most basic form, and Ashwini talks about it slightly more detailed in his presentation, but in the most basic form, when somebody does not pay the EMI for 3 months or 90 days, you term that as a gross NPA. So let's say if I am running a housing EMI, if I don't, for continuous 3 EMIs, I don't pay to the bank will call that as a gross NPA. So let's say if the bank says that my gross NPA is 5%, what the bank is trying to tell you that out of the 100 rupees which is outstanding as a loan, 5% of those loans have become bad, right? Or you can call it slippage also. So typically banks use a language saying that 95% of the 100 that I have outstanding, 95% is standard asset and 5% is a slippage. What it is trying to tell you is that it's become an NPA, right? But what you have to understand is, again, there is a risk management process here that when there are loans that have not paid you EMIs for three months, and let's say 5% of those loans are gross NPAs, RBI knows for a fact that this can be challenging over a period of time, right? Because if more and more people don't pay you back, at some point in time, definitely the bank will face a challenge. So RBI says that whenever you have gross NPAs, right? Whenever you've identified that people have not been able to pay you back in 3 continuous months, provision for it. What is provision? Provision say, RBI says that look, out of the 100 rupees that you have outstanding, 5% is not coming back, right? Now this is just an example. RBI says on this 5% that is not going to come back, put 0.5 rupees aside as provision. So tomorrow, if this number increases, you keep increasing your provision. It's a bucket or it's a reserve that you keep creating so that tomorrow you have more and more reserves available if more people are not paying your money back, so you don't end up defaulting as a bank, right? So very important provision. Now what happens is when your gross NPA goes up, right? Why is it not good? It's not good because you know that from 5% now 10% of the money that I'm supposed to take back from the market is risky, and they've not paid me money back on time, so I might have a risk of not getting this money back. But over and above that, right, you will have to keep another 1 rupee aside. If your 10% is gross NPA, another 1 rupee aside as provisions, which you will not be able to lend. And because you are not going to be able to lend, right, again you are not going to be able to make monies out of those investments, right? So gross NPA is not only a challenge of that 10% money supposedly not coming back, but also you will have to keep more and more money aside which you will not be able to lend as provisions. And hence you again look at another important data point, which is called as the provisioning coverage ratio. Provisioning coverage ratio typically tells you that how much provision have you done, right, versus the total NPS, right? So we are saying that if your bad loans or NPAs were 10, right, you've kept 1 rupee aside, your provisioning is 10%, right? Which means if 10 rupees were supposed to default, you kept 1 rupee aside. Now please understand, from a market standpoint, the provisioning coverage ratio of banks which are doing a good job is somewhere around 70%. So you will typically see the provisioning on the bad loans kept as high as 70%, right? So now let's say from the 100 rupees that you have outstanding as loans, 5 rupees is gross NPA, right? For which you've kept 1 rupee, or let's say 0.5. Let's take the same example that we took, 0.5 aside as provisioning, right? Which means there is 4.5% or 4.5 rupees of NPA for which you've not kept any provisions aside. 5 रुपए का NPA है, आपने 0.5 रुपीज साइड में रखा है, तो 4.5 रुपए के लिए आपने कुछ भी साइड में नहीं रखा है, इसे आप नेट NPA कहते हो, right? Net NPA is that number for which provisioning is not done. So largely what I'm trying to tell you is you have 100 rupees of loan outstanding, right? You have, let's say, 5 rupees of gross NPA. RBI will ask you, these are random numbers, RBI will ask you to keep 1 rupee aside as provision, right? So the remaining amount for which you've not kept any provision is called the net NPA. Again, a no-brainer. You don't want gross NPAs, net NPAs or provisioning to increase, because the more you have gross NPAs, provisioning or net NPAs increasing, this is bad for you in terms of business, because either this money is not going to come back to you, probability is high, or you are keeping a lot of money aside which you are not allowed to lend, and hence you are losing out on the income that you could have potentially made, right? So we've learned a couple of things. We learned something called as cost of liabilities. We said this is the rate at which the bank is borrowing money from the market, 6% in our case. We said the lower this rate is, the better it is. We said how can this become lower? We said increase your CASA, increase your current account and savings account rate. We said advances growth should be good, because higher the better. Higher the better. You want a bank to lend more and more money so that the sales increases. But when the advances growth increases, you want the NPAs to be lower. So gross NPA to be lower, you want the net NPAs to be lower, and automatically when this is lower, provisioning comes down, right? And you want the provisioning coverage ratio to be higher, because you want the bank to be well capitalized on the bad loans that probably they are expecting. We also understood that the difference between the 6% at which the bank borrows and 8% at which it lends, that 2% or 100 crore in our example, that 100 crore in our example is the net interest income. This is the core business of the bank, and this is the profits that the bank has made from the core business. And we said that like other banks, other businesses have profit margins. Profit margin in a bank is called net interest margin. If the net interest margin is 2%, we are trying to say that the bank has made a net 2% interest on the total loan that it lent out. You want both of these numbers to be higher in a particular bank, because higher the number, you are making more profits. So these are the basic things that you had to understand in banking as a sector or a business. I'm hoping that you would have understood the banking sector and a little bit of nuances that move the sector around slightly more better than what you currently know of. I'm also going to run you all to three more things. There are three more things that people look at while they pick banking stocks, apart from those things that I spoke to you of. The first is called cost to income ratio. Now, like the name suggests, cost to income ratio, it is saying that if my operating cost was 10 rupees and my, let's say, income was 100 rupees, what is my cost to income ratio? So it says how much expense did I incur to generate this income, right? It's a no-brainer that you want the cost to be lower, right? So you want the income to be 100, but you want the cost to be 5%. You want the income to be 100, but you want the cost to be 3%. And hence cost to income ratio, the lower the better it is for a bank, because the lower the cost to income ratio is, it shows you that the expenses that the bank is doing to generate the same amount of income, or whatever amount of income, the cost is lower, right? So this is one very important data point that people look at while selecting banks. They look at something called as return on assets. I will not delve too much into return of assets and valuation ratios in this particular video, but just so that you understand, return on assets, we are saying what is the net profit, what's the net profit that you are making as a bank on the total assets that you have. This typically gives you the efficiency ratio or efficiency of the bank, whether the bank is able to utilize all the assets that the bank has and try and generate as higher profits as possible. So you also want the return ROA of the banks to be much better or higher or keep increasing year after year. And the valuation ratio that people look at while they evaluate banks is price to book value, right? So let's say if the price to book value of a bank is 3, what it means is very simple, that if the bank has to shut down today, right, and bank will sell all the assets that the bank has and pay back all the liabilities that the bank has, whatever remaining amount of money is left is what is paid back to the shareholders. Okay, so let's say if after paying all the liabilities, selling off all the assets, for one share that you hold, you are expected to receive, let's say 100 rupees per share. So after all the assets were sold, all the liabilities were paid off, whatever amount of money that remained was paid back to shareholders. So for every share that you hold, you receive 100 rupees back. But the stock is trading in the market at 300 rupees. So when the company shuts down, you are expected to receive 100, but the stock is trading 3 times this value, 3 times the book value, which is called the price to book. So if the bank shuts down, how much do you receive? 100. But at what price it is trading at in the market, you say bank book value is 3. Now, of course, this is a valuation ratio. Theoretically, the lower the better, because the lower it is, you feel that it is cheaper and I should buy. But there are other nuances that you typically look at before deciding whether or not this 3 number is good or bad, right? So these are the basic things that you typically look for in a bank before you end up selecting a bank. I'm hoping that this half an hour of conversation that I actually had with you, explaining to you these things around bank, would make your understanding about the conversation that I and Ashwini are now going to have much more meaningful and understandable. Of course, this video is recorded on a different date, and I'm just going to patch in my conversation with Ashwini, which happened on a different date, right? But I'm just hoping that after you go through this 1.5 hour of video, you would have understood the banking sector far more than you would have understood prior to this. And I'm just hoping that you will stay back and hear our conversation with Ashwini. Thank you so much.
Hi, Kirtan. How are you doing?
Very good. Thank you so much. I hope you're doing great.
Yeah, good too. My pleasure.
Banks, like I said, are something that can really decide the fate of the index because of the kind of weight banks really have in our indices. And I think अगर आप बैंक को थोड़ा सा track करना समझ लो, right? Largely you will be able to demystify whether markets are going to go up or down, right? So banks are extremely important. And whatever little I understand, the best analysts are typically the ones who do BFSI because there's a large allocation of money that comes to that sector. Am I correct?
Thanks for the kind words. I would really won't refute that.
Awesome. So, Ashwini, you know our audience is mutual fund distributors, retail investors, right? So I want your help to understand how can they really look at the banking sector? What should they look at before picking up a stock? So I'm going to make you the host. I've gone through your presentation. I know that the session is going to be extremely interesting. I'll just make you the host, and then I will leave it to you to help our participants understand the banking sector better. Just give me a moment.
Thanks a lot, Kirtan. Thanks for inviting me. Thanks for having me up. So I'll try to share my views on the banking sector. The banking sector, no doubt, is one of the most important sectors in India and definitely for any country, more for an emerging market or a developing nation, because whether you require, because for any nation, capex is required to grow the economy, or there is a good demography which requires all the retail products, whether in terms of housing, personal loans, vehicle loans, all of these things. And India, thankfully, requires all of these things, whether it's retail, whether it's capex, large corporates, or whether it is SME and SME. So the banking sector entirely really becomes very important for our country, and considering that it has a huge weight in our overall Nifty 500 as well. So I'll keep my conversation to the simplest possible, and I'll try to explain the banking sector to the best of my knowledge.
Please.
So if you look at currently, India may total credit which has been given out by the banking sector is roughly 140 trillion rupees.
Wow.
140 lakh crore ke aaspaas hai.
Wow.
So out of that, if you look at PSU Banks still commands the lion's share, including SBI. They are roughly 56% of the total market share. This number used to be on the higher side 10 years back. It has come down because PSU banks were not growing. It was the private sector banks which has grown in the last 10, 15 years. Private sector banks, it is roughly at 40%. Foreign banks are roughly at 3.7% to be precise. Foreign banks have been marginal players. They have been in between 3.5% to 5%, but they have been losing market shares in the last 15 years.
Okay.
So if you look at PSU banks, post the merger of all the PSU banks in the last 4 years, currently we have 12 PSU banks, including SBI, 21 private banks hai, 44 foreign banks hai. All these 44 foreign banks they are just there for namesake. They do more of corporate activity. 12 स्मॉल फाइनेंस बैंक्स हैं, 4 पेमेंट बैंक्स हैं और करीब 43 RRBs हैं. RRBs are basically regional rural banks which come under the PSUs. जो PSUs है mostly वही own करते हैं and they are mostly region specific.
Ashwini, if you don't mind me asking,
Yeah, sure.
So let's say we are saying that if 100 rupees of loans were given out, 56% of the loans were given by PSUs and 40% loans were given by private sector. That's what we are trying to say, right?
Yes.
And also, could you
not given out as on today.
As on today, yeah.
जितना भी आज तक लोन दिया गया है, 56 रुपीस PSUs ने दिया है,
Perfect.
40 रुपीस प्राइवेट ने दिया है और बाकी करीब 3.25 के आसपास फॉरेन बैंक्स ने दिया है.
Perfect. While it is extremely immaterial कि foreign ने और small finance, payment banks और rural banks ने बहुत, there is hardly anything that they've done. But how is a small finance bank or a payment bank or a regional bank different from the normal PSU or private bank?
Small finance bank, they are like they are not full-fledged banks. Okay. They are 1 or 2 steps behind becoming a full-fledged banks. So if you look at SFBs, so सबका एक ruling RBI regulations होता है that certain percentage has to be in MFI business. And payment banks, they cannot accept they cannot give out loans. They can accept deposits till a certain limit.
Sure. So I think small finance payment banks can accept up to 1 lakhs of deposit, but can't give out loans.
Can't give out loans, exactly.
Can't give out loans. Okay.
And payment banks is more of a vehicle while you're transmitting money or transferring money from one channel to another channel. Because आपको वहाँ पे रह करके कुछ interest तो मिलता नहीं है payment bank में. आप जो भी wallet में रख रहे हो, you don't get any interest out of it, right?
Yeah. So it's like, so a Paytm allows you to keep up to 1 lakh in your wallet, does not pay you any interest, but you use that to pay your tolls and electricity bills and all of that.
Exactly. That's what you do. But कोई लाख रुपए तक रखता नहीं है, 5,000, 10,000, 2,000 रखते हैं, and people keep on just adding on to it.
Perfect. And small finance banks are banks where you can keep deposits, but typically those are banks for the underserved, right? यानी microfinance loans देते हैं या SME, MSME loans देते हैं जो typically private banks और PSUs का focus नहीं है. Do I get that correct?
नहीं, अभी private banks का focus जा रहा है. जो जितने भी SFBs हैं, लास्ट 6-7 साल में सबको लाइसेंस दिया गया है. पहले वो typically MFIs थे.
Correct.
MFIs थोड़े बड़े हो गए and those who had aspiration of becoming a bank, they applied for a small finance banking license. So when you are in a lower nursery and then you move to KG and then you move to class 1, 2, 3. So this is the graduation, or this is just like nursery student moving to class 1. That's an SFB, I would put it.
Perfect. Got you. Thank you so much.
Yeah. So I'll move to the next slide now. So this is how a PL account and a balance sheet looks like. Now, सबसे बड़ा बात समझने के लिए है कि बैंक करता क्या है. बोलने के लिए बहुत इजी है कि बैंक कुछ नहीं करता, पैसा लेता है इधर से, उधर से पैसा देता है.
करेक्ट.
बट पैसा आप जो दे रहे हो वो वापस भी आना चाहिए और प्रॉफिट के साथ आना चाहिए.
करेक्ट.
सो और जो डिपॉजिट है वो भी एक तरह का डिपॉजिट नहीं होता है, कई तरह के डिपॉजिट होते हैं. सो लेट्स स्टार्ट विद द डिपॉजिट्स. सो बैंक्स कैन टेक वेरियस काइंड ऑफ डिपॉजिट्स. एक होता है करंट अकाउंट डिपॉजिट. तो उसमें टिपिकली वो बिजनेस और प्रोप्राइटर्स से पैसा लिया जाता है वो. And उसमें कुछ डेली लिमिट ऐसा कुछ इतना ज्यादा नहीं होता. दैट इज फॉर बेसिकली मनी टेकन फ्रॉम बिजनेस पीपल हु कैन गिव bigger amount of check for withdrawal and you don't and they don't get any interest paid out of it.
Perfect.
For most of the larger private sector banks, the CASA is roughly 13 to 15% of their overall deposits.
Sure.
अब आता है सेविंग्स अकाउंट, जो अपने सब कोई जानते हैं कि अगर अपने को कुछ शॉर्ट टर्म के लिए पैसा बैंक में जमा करना है, जब भी चाहे तब निकाल सकते हैं, जिसके अगेंस्ट में हमें चेकबुक मिलती है, तो वो है सेविंग्स अकाउंट. उस पर करीब 3.5 से 4% पैसा मिलता है. मोस्टली 3.5% पैसा इंटरेस्ट मिलता है. कुछ बैंक्स उससे ज्यादा भी दे रही हैं. और तीसरा सबसे इंपॉर्टेंट होता है टर्म डिपॉजिट, जिसे हम फिक्स डिपॉजिट कह के बुलाते हैं, जिससे हम सब वाकिफ है. और हम मोस्टली सबसे ज्यादा पैसा वहीं जमा करते हैं जहाँ पे करीब 6 से 8% के आसपास अभी आपको ब्याज दरें मिल रही हैं।
श्योर।
एंड बैंक्स इंस्टीट्यूशन से भी पैसा ले सकती हैं, काफी सारे इंस्टीट्यूशन से, और दूसरे बैंक से भी बोरो करती हैं। बोरोइंग्स में अगर आप देखोगे तो एक बैंक आरबीआई से बोरो कर सकता है, दूसरे बैंक से बोरो कर सकता है। सो आपको जो बैंक लोन देती है उसका मेन सोर्स ऑफ फंडिंग बोरोइंग्स और डिपॉजिट से ही आता है।
Correct. Ashwin, if I may request you to use the cursor so that the participants know what are you highlighting and talking about, it'll be great.
ठीक है, I'll do that.
Perfect.
Okay, now if I come to the provisions, so I'll come to provisions a little later on.
Sure.
बैंक से काफी सारी बाकी लायबिलिटीज भी होती हैं, तो यहाँ पे सब ग्रुप करके अदर लायबिलिटीज कर देते हैं हम लोग।
Okay, sure.
अब जो इम्पोर्टेंट पॉइंट्स हैं मैं वो कवर कर रहा हूँ। अब अपने आते हैं मेन एडवांसेस पे, जो जहाँ पे अपने को बैंक से सबसे ज्यादा जरूरत पड़ती है।
Sure.
तो एडवांसेस में एक तो आरबीआई के काफी रूल्स एंड रेगुलेशंस है। आरबीआई कहता है कि कोई भी बैंक अगर 100 रुपए एडवांस दे रही है तो 40% उस एडवांसेस का दे हैव टू गिव इन द पीएसएल कैटेगरी, दैट इज प्रायोरिटी सेक्टर लेंडिंग, बिकॉज all these banks when they were nationalized or they were established maybe 50 years back or 70 years back, India was a developing country. Correct. So all these banks had a social obligation.
Sure.
कि आपको एसएमई में, एमएसएमई में, यूज्ड व्हीकल्स में या फिर रूरल सेक्टर में फार्मर्स को इतना लोन देना ही पड़ेगा। तो वो सब मिलाकर के करीब 40% के आसपास देना पड़ता है। और बैंक्स रिटेल कैटेगरी में लोन देती हैं, आपका हाउसिंग लोन हो गया, व्हीकल लोन हो गया, क्रेडिट कार्ड, पर्सनल लोन्स और कई तरह के बहुतेरे लोन देती हैं। एंड देन इन द कॉर्पोरेट साइड, मिड कॉर्पोरेट साइड, टर्म लोन हो गया, वर्किंग कैपिटल लोन हो गया, ये एसएमई, एमएसएमई और कॉर्पोरेट्स को देती हैं। अगर आप लास्ट 10 साल में देखो तो अपने कंट्री में केपेक्स साइकिल इतना बड़ा आया नहीं है, तो कॉर्पोरेट को लोन थोड़ा कम हो गया है और रिटेल कैटेगरी में काफी लोन बढ़ा है। अगर आप देखो लास्ट 15 साल में हाउसिंग सेक्टर में इंडिया में काफी बड़ा बूम आया है। सेम इन व्हीकल मार्केट, पर्सनल लोन्स, क्रेडिट कार्ड्स। सो बिकॉज ऑफ ऑल दीज योर एडवांसेस हैव केप्ट ऑन इंक्रीजिंग। और फिर सबसे बड़ा एक होता है इन्वेस्टमेंट्स, जो अगर आप यहाँ पे देखो इन्वेस्टमेंट्स, एसएलआर, जीसेक जो अपने सुनते हैं। करेक्ट। सो बैंक्स ने आपसे मेरे से पैसा लिया, अब वो तो सबका तो लोन देगी नहीं, तो आरबीआई चाहती है कि एक बैंक स्टेबल भी रहे, कभी कुछ अनसीन फोर्सिन इवेंट आ जाए तो बैंक के काफी सारे इन्वेस्टमेंट्स ऐसे करने पड़ते हैं जो काफी लिक्विड हो, जब बैंक जब चाहे तब उनको लिक्विडेट कर सकती है। एडवांसेस है, एडवांसेस देने के समय बैंक दे सकती है, पर जब वो पैसे वापस कब आएंगे, जब उस एडवांसेस की ड्यूरेशन पूरी होगी। और इसी बीच में अगर पैसे की जरूरत पड़ गई तो बैंक्स को बोला गया कि इन्वेस्टमेंट रखो आप। बैंक्स गवर्नमेंट बॉन्ड्स में इन्वेस्ट करते हैं, एसएलआर, जीसेक। So it also helps the central government in borrowing money for their needs. Municipal bonds वगैरह में से वहाँ पे इन्वेस्ट करते हैं, तो इसके भी अपने रूल्स एंड रेगुलेशंस हैं कि कहाँ पे इन्वेस्ट करना है। बैंक्स को हर समय 4% ऑफ द टोटल डिपॉजिट्स आरबीआई के पास कैश रिजर्व रेशियो की तरह जमा रखना पड़ता है। So this is this part, cash in hand, and with RBI. With RBI, you have to keep 4% on a periodic basis, and as all you know, that banks also maintain a decent amount of cash with themselves and other banks. Correct. अब ये सब जो भी मैंने बताया, इसके अगेंस्ट में अब कमाई कहाँ से होती है, तो जो भी एडवांसेस दिए आपने।
So Ashwin, if you don't mind, if I can just to make sure that I've understood what you were trying to say, right?
Yeah, sure.
We are saying कि बैंक का बिजनेस है बोरो करना और लेंड करना, पर उतना आसान नहीं है, like you rightly said. Right? Where are they borrowing from? So we said they are borrowing either from current account, savings account, or term deposit, जिसे आपने FD का, or they are borrowing from financial institutions like RBI's, other banks, right? So that's the borrowing, right?
Right.
They are lending to the part that you referred as advances. They lend to private sector, they lend to corporates, agriculture, SME, MSMEs, right?
Right.
So they borrow, they lend. उनके बीच का difference is the money that they make. But if they borrowed 100 rupees from the market, they have to keep 18 rupees in SLR. को compulsory government securities buy करनी पड़ेगी.
Right. At least उतनी.
At least.
एटलीस्ट बैंक्स टिपिकली उससे ज्यादा ही रखते हैं, 20-21% के आसपास SLR रखते हैं, 22% के आसपास, 4-4.5% के आसपास CRR रखते हैं, और थोड़ा
Correct.
कैश वगैरह रखते हैं। तो
Correct.
जैसा आपने कहा, अगर 100 रुपया मैंने बोरो किया है, तो मैं और अगर डिपॉजिट भी कुछ लिया है 10-15 रुपए का, मान लो तो 115 रुपए, तो 25 रुपए निकाल दो, तो करीब 85 से 90 रुपए मैं लैंड कर सकता हूँ, अगर डिपॉजिट लिया है तो।
Got you.
अगर बोरो किया है तो, अगर खाली डिपॉजिट लिया है तो मोटा मोटा मैं 75 रुपए तक लैंड कर सकता हूँ आउट ऑफ दिस डिपॉजिट्स, बट मेरे पास कैपिटल भी है।
Got you. Yeah.
तो एज पर RBI 9% कैपिटल होना चाहिए, उस पर आप वो लैंड कर सकते हो आप।
Sure. Got you. Got you.
सो अगर आप देखोगे, बैंक्स जो पैसा दे रही है, जो एडवांसेस दे रही है, उस पे कुछ इंटरेस्ट चार्ज कर रही है।
Correct.
So typically that number is quite higher than the interest they pay on the deposits and the borrowings,
Correct.
right? So अगर आप देखोगे यहाँ पे इंटरेस्ट अर्न, तो इंटरेस्ट कहाँ से अर्न कर रही है? वो लोन्स एंड एडवांसेस जो दे रही है उससे कर रही है, और जो उसने इन्वेस्टमेंट किया हुआ है वहां से भी इंटरेस्ट आ रहा है। सो वी कॉल दैट इंटरेस्ट अर्न। एंड जो RBI के पास और बाकी बैंक्स के साथ कैश मेंटेन कर रही है वहां से भी आ रहा है। CRR पे कोई इंटरेस्ट नहीं मिलता है उसको।
Sure.
So this entire yield which you get is known as yield on assets or yield on funds.
Sure.
ठीक है। और जो इंटरेस्ट एक्सपेंस है, आपको डिपॉजिट और बोरिंग्स दोनों पे मिला के इंटरेस्ट एक्सपेंसेस देने पड़ते हैं, तो दैट इज ओवरऑल नोन एज कॉस्ट ऑफ फंड्स। एंड हाउ डू यू अराइव एट कॉस्ट ऑफ फंड्स? You divide the interest expenses by the average of borrowings and deposits for this year and last year.
Okay.
So you get the cost of funds.
Okay.
ठीक है। अब yield on funds minus cost of funds, मतलब आपने जो कमाया माइनस जो आपने खर्चा किया, उन दोनों का जो स्प्रेड है उसको बोलेंगे स्प्रेड ऑन फंड्स या नेट इंटरेस्ट मार्जिन।
Perfect.
You get that?
Perfect. Perfect. Net interest margin. Yes.
हाँ, उसके बाद बैंक्स की काफी सारी और भी एक्टिविटीज होती है अपार्ट फ्रॉम जस्ट लेंडिंग। काफी सारे सर्विसेज करते हैं। आप जो भी लोन ले रहे हैं अपने, उस पर प्रोसेसिंग चार्ज करते हैं, कहीं पे 25 बेसिस पॉइंट्स, 50 बेसिस पॉइंट्स, 100 बेसिस पॉइंट्स। हाउसिंग लोन पे कुछ भी फॉरेक्स कार्ड लिया तो वहाँ पे सर्विस देना पड़ रहा है, कोई भी चेक बाउंस हुआ वहाँ पे सर्विसेज देना पड़ रहा है। कॉर्पोरेट्स को तो काफ़ी सारे सर्विसेज देते हैं उन लोग, जहाँ पे काफ़ी सारे उन लोग प्रोसेसिंग चार्जेस लेते हैं, कैश मैनेजमेंट सिस्टम एंड all the services you name, overdraft facilities, you name it, and there's a processing fee attached to it. That you don't get anything for free. So there is a cost attached everywhere.
Correct.
So that's a part of the other income. और जो अपने इन्वेस्टमेंट्स होल्ड कर रहे हैं, जैसे मैंने यहाँ पे दिखाया, इन्वेस्टमेंट्स होल्ड कर रहे हैं SLR, GSEC वगैरह में, कॉर्पोरेट बॉन्ड्स में, इंटरेस्ट रेट मूवमेंट के साथ अगर आपका इंटरेस्ट रेट ऊपर की तरफ जा रहा है तो टिपिकली आपको बॉन्ड्स में लॉसेस होते हैं।
Correct.
और अगर इंटरेस्ट रेट नीचे की तरफ है, इंटरेस्ट रेट घटता है, तो यहाँ पे प्रॉफिट होते हैं। सो दैट्स पार्ट ऑफ अदर इनकम, या फिर गेन्स फ्रॉम इन्वेस्टमेंट्स, वो भी यहाँ पे आ जाता है। सो अगर अपने ये इंटरेस्ट इनकम और अदर इनकम को ऐड करें तो टोटल इनकम बनता है।
Sure.
तो फिर एक्सपेंसेस पे आते हैं। एक्सक्यूज मी। तो टिपिकली किसी भी ऑर्गेनाइजेशन में जो नॉर्मल एक्सपेंसेस होते हैं वो यहाँ पे होते हैं, एम्प्लॉय एक्सपेंसेस, डेप्रिसिएशन एंड अदर एक्सपेंसेस, मतलब ऑल द एस्टैब्लिशमेंट एक्सपेंसेस एंड समथिंग मिला करके, तो वो सारे एक्सपेंसेस आ गए। सो उसके बाद जो भी इनकम हुआ है माइनस द एक्सपेंसेस, देन यू गेट देयर ऑपरेटिंग प्रॉफिट और प्री प्रोविजन ऑपरेटिंग प्रॉफिट। सो अगर देखा जाए मोटा मोटा मैं बताता हूँ, कॉस्ट टू इनकम रेशियो मोस्ट ऑफ द बैंक्स का करीब 40 से 50% के बीच में है, 40 से 55%। जो प्राइवेट सेक्टर बैंक्स है वो 40 से 50 के बीच में रहेंगे, और PSU बैंक्स थोड़े ज्यादा रहते हैं।
Okay.
अगर अब सबसे इंपॉर्टेंट चीज पे आते हैं, अपने जो प्रोविजन लाइन है, लास्ट 12 साल में बैंकिंग इंडस्ट्री में जो सबसे खतरनाक आइटम था यही लाइन आइटम था, प्रोविजंस। अगर आपने सही लोन दिया है और वो आपको पूरी तरह वापस मिल जाता है अलॉन्ग विद द इंटरेस्ट, देन इट इज अ गुड ट्रांजैक्शन। सपोज कहीं कुछ प्रॉब्लम हो गई, वेदर आपने जिस जहाँ पे लोन दिया है उस इंडस्ट्री में प्रॉब्लम हो गई, रिटेल लोन दिया है तो वहाँ से आपका लोन वापस नहीं आया, या लग रहा है कि कुछ पैसे मेरे को नहीं मिलेंगे वापस, तो आपको उसके अगेंस्ट में प्रोविजनिंग करना पड़ता है।
ओके
तो एक तो आप जो भी लोन दे रहे हो इनिशियल में ही स्टैंडर्ड लोन होते हैं, तो उनके लिए आपको 40 बेसिस पॉइंट्स प्रोविजन करना पड़ता है, दैट इज 0.4%। और जैसे जैसे अगर आपको 3 महीने से इंटरेस्ट वगैरह कुछ नहीं मिला, इंटरेस्ट या EMI या प्रिंसिपल कुछ भी नहीं मिला, देन यू टेंड टू डाउट कि भैया ये पैसे वापस मुझे मिलेंगे कि नहीं मिलेंगे, देन यू हैव टू प्रोवाइड। अगर 6 महीने नहीं मिला, साल भर नहीं मिला, तो आपको और प्रोवाइड करना पड़ता है, और 3 साल में आपको पूरा राइट ऑफ करना पड़ता है। तो वो आपको पूरा प्रोविजंस यहाँ पे आ जाता है। सो ऑपरेटिंग प्रॉफिट में से अगर आप प्रोविजन हटाओगे तब आपका प्रॉफिट बिफोर टैक्स आएगा, जिसे PBT कहते हैं, और PBT में से टैक्स हटाएंगे तो पैट आ जाएगा, जिसे प्रॉफिट आफ्टर टैक्स कहते हैं, नॉर्मल भाषा में जो प्रॉफिट कहते हैं। खाली जो पैट है हम लोग मेजर करते हैं रिटर्न ऑन एसेट से, बेसिकली दैट इज पैट डिवाइडेड बाय एवरेज ऑफ टोटल एसेट्स ऑफ दिस ईयर एंड लास्ट ईयर।
ओके
Good. Now I'll come to the next one, important one. So just 1 minute. Yeah, I'll just keep it here. Is it good enough?
yeah perfect.
So now this is very important for someone to understand. What's a standard asset, substandard asset, doubtful asset, and loss asset? सबसे पहले आपका जो भी आपने लोन दिया है, अगर उस पर पैसे आपको टाइम से मिल रहे हैं तो दे आर स्टैंडर्ड एसेट्स। कुछ एक साल पहले RBI ने रूल्स एंड रेगुलेशंस चेंज किए थे। अगर आपको आपका इंटरेस्ट या प्रिंसिपल या कोई भी इंस्टॉलमेंट 0 to 30 डे के अंडर में है, देन इट इज SMA 0। 30 to 60 डे के बीच में है SMA 1 हो गया, 60 to 90 डे के बीच में तो SMA 2 हो गया, और 90 डे के ऊपर होने से SMA 3 हो गया आपका। So that's the line they have cleared, so that पहले क्या था कि अगर आपको 90 डेज तक पैसे नहीं मिलते हैं, then after 90 days you become NPA. So now before becoming an NPA, you travel from SMA 0, 1, 2 to 3 to NPA.
Right.
So now this is the asset classification. Something which has remained substandard asset or which has remained in NPA for 12 months is a substandard asset. कि RBI ने भी क्लासीफाई अलग अलग तरीके से किया है कि पहला, अगर मुझे 12 महीने तक NPA है, कुछ पैसा नहीं मिला, तो सब स्टैंडर्ड असेट है, मैं उसको डाउटफुल नहीं मान रहा, मतलब मुझे आशा है कि पैसे मिल जाएंगे। एंड समथिंग व्हिच हैज रिमेन सब स्टैंडर्ड फॉर मोर देन 12 मंथ्स बिकम्स अ डाउटफुल। मुझे तब लगता है कि 12 महीने हो गए यार, अब पैसे आएंगे कि नहीं आएंगे, तो मैं बोलता था भैया थोड़ा डाउटफुल लग रहा है। एंड सपोज कुछ ऐसे इंसिडेंट्स हो जाते हैं कि ऑडिटर्स या बैंक बोलते हैं कि भैया मुझे लग नहीं रहा है पैसे आएंगे, तब उन लोग लॉस एसेट्स मान लेते हैं, दे हैव टू फुल्ली प्रोवाइड फॉर इट। ओके, सो नाउ वी कम टू द लेफ्ट पार्ट ऑफ द चार्ट, दिस पार्ट. So any asset which is substandard but it is secured, you have got some property or some lien over some asset, then up to 6 months you have to make 15% provision. And अगर आपको लग रहा है वो विलफुल डिफॉल्टर है तो 25% प्रोविजन बनाना पड़ता है। मतलब आपने अगर 100 रुपए का लोन दिया है तो 15 रुपए का प्रोविजन बनाना पड़ेगा, और अगर विलफुल डिफॉल्टर लग रहा है तो 25 रुपए का प्रोविजन बनाना पड़ेगा। श्योर, ये सिक्योर्ड पे है। और अगर सब स्टैंडर्ड अनसिक्योर्ड है तो 6 महीने तक आपको इंफ्रास्ट्रक्चर लोन में 20%, नॉन इंफ्रा में 25% प्रोविजन बनाना पड़ेगा। एंड विलफुल पे और 6 महीने से 1 साल में द नंबर्स आर द सेम, बट फॉर विलफुल डिफॉल्टर्स इट इज 40%। 40%, ओके। डाउटफुल होते ही जैसे ही सेकेंड ईयर हो गया तो आपका ये प्रोविजनिंग थोड़ा बढ़ जाता है। अनसिक्योर्ड में आपको 100% प्रोवाइड करना है, जिसे आप ये देख रहे हो सेकेंड ईयर में डाउटफुल पे 100% प्रोवाइड करना है, चाहे विलफुल हो चाहे नॉन विलफुल हो। और अगर नॉन विलफुल है तो 25% प्रोवाइड करना है जैसे कि पहले था सब स्टैंडर्ड में, और अगर विलफुल डिफॉल्टर है तो 40% प्रोवाइड करना है। हाँ. और डाउटफुल में भी सेकंड कैटेगरी में इन थर्ड एंड फोर्थ ईयर जो अनसिक्योर्ड हो उस पर तो पूरा ही प्रोवाइड करना है आपको विलफुल में, और जो करंट प्रोविजनिंग अनसिक्योर्ड है इसमें 100% प्रोवाइड कर ही चुके हो आप पहले ही। हाँ. और ये जो सिक्योर्ड पोर्शन है उस पर 25 का 40 करना है, आपको 15% एक्स्ट्रा प्रोवाइड करना है।
डन।
मतलब थर्ड ईयर में आकर के आपको 100 रुपए में अगर किसी को लोन दिया है, लग रहा है पैसे नहीं आएंगे, तो अनसिक्योर्ड पार्ट का पूरा राइट ऑफ कर चुके हो आप, 100 का 100 रुपए राइट ऑफ कर चुके हो, और सिक्योर्ड पार्ट में अब 40 रुपीज तक राइट ऑफ करना है आपको, और 5th ईयर ऑनवर्ड्स आपको पूरा का पूरा 100 रुपए प्रोवाइड कर देना है।
So over here, if I may just clarify, when you say provisioning, do I have to keep 40 rupees aside, or should I write off that 40 rupees, or it means the same?
No, you don't have to write off. Write off is different. आपको ये 40 रुपीज प्रोवाइड करके साइड रखना है।
करेक्ट।
राइट ऑफ मतलब आपने बुक से राइट ऑफ कर दिया कि भैया आप मुझे नहीं मिलेंगे।
करेक्ट।
मैंने पीएल अकाउंट पे पूरा हिट ले लिया, बट यहाँ पे आप खाली 40 रुपीज हिट ले रहे हो, आपको लग रहा है कि 60 रुपीज मुझे मिल जाएंगे अभी।
Sure, got it.
So this is just an example. This is an ABC bank, imaginary bank. I just wanted to explain how this works.
Sure.
There is no linkage to any bank. So what is interest income? Roughly interest income 9 से 11% के आसपास रहेगा ईयर 1, 2, 3 में देखें। So जैसे इंटरेस्ट रेट बढ़ता है, आपका जो भी इंटरेस्ट रेट की ट्रेजेक्टरी रहती है और प्रोडक्ट का ट्रेजेक्टरी रहता है, सो कॉर्पोरेट से अगर रिटेल की तरफ जा रहे हो तो थोड़ा आपका यील्ड बढ़ेगा, और ओवरऑल इंटरेस्ट रेट ऊपर जा रहा है तो यील्ड बढ़ेगा। तो अगर वही आप देख रहे हो तो जो इंटरेस्ट इनकम था वो 8.9 का 11.8 हो गया है, और आपका इंटरेस्ट एक्सपेंसेस भी बढ़ आ रहा है। 4.95% जो इंटरेस्ट रेट था वो करीब 7% के आसपास हो गया है। जो स्प्रेड देख रहे हो आप 8.9 माइनस 4.9, 4% का स्प्रेड था, वो 4.7 हो गया है, राइट। एंड नेट इंटरेस्ट इनकम व्हिच इज slightly different from the spread has gone up from 4.2% to 4.7%. जो मैंने अदर इनकम बताया आपको, जैसे फी इनकम हो गया, गेन फ्रॉम इन्वेस्टमेंट्स हो गया, वो करीब 1.8% का 2.1% हो गया। सो आप देख रहे हो टोटल रेवेन्यू जो ये 4.2% प्लस 1.8% था, टोटल मिलके 6.1% था, वो 6.8% तक बढ़ गया है।
Sure.
सो बैंक में आपको यही देखना है ये टोटल रेवेन्यू कितना है एज अ परसेंटेज ऑफ टोटल असेट्स और इंटरेस्ट पेरिंग असेट्स, और उसमें से जो सस्टेनेबल एनआई है वो कितना है, बिकॉज द अदर इनकम कैन चेंज स्लाइटली। अगर आपका कभी इन्वेस्टमेंट गेन ज्यादा हो गया तो काफी बढ़ा हुआ दिखाई देगा। सो यू हैव टू सी कि कोर इनकम का आपका स्थिति क्या है, कोर इनकम कितना स्टेबल है, और जो ऑपरेशनल एक्सपेंसेस हैं इसमें करीब 3 से 3.5% के आसपास हैं, वो कितने रेंज हैं, मैंने हाउ मच ऑफ टोटल रेवेन्यू आर दे। Typically for any good bank that number should be lower than 50, more like 44-45 types. ठीक है। और the elephant in the room is this number, provisions to average total assets. अगर आप यहाँ पे सब मेंटेन कर पा रहे हैं, ये नंबर अचानक से बढ़ जाता है, and this is outcome of the loan underwriting which you have done. If you have done a good loan underwriting, this number should be 20-25% of your टोटल ऑपरेटिंग प्रॉफिट, राइट। अगर आप देखो टोटल रेवेन्यू जो करीब 6.8% है, उसमें से 3.5% हटा दो तो 3.3% के आसपास आपका ऑपरेटिंग प्रॉफिट बचेगा, राइट।
करेक्ट।
अगर यही नंबर 1.9 है तो आपका करीब 1.4% के आसपास आपका 1.4% के आसपास रिटर्न ऑन एसेट बचेगा। यही नंबर अगर आपका 1.9 की जगह 2.5 चला जाए तो आपका रिटर्न ऑन एसेट सीधा नीचे आ जाएगा। और 1.9 का अगर सुधार के 1.5 आए तो वो रिटर्न ऑन एसेट सीधा बढ़ के 1.4 का 1.8 चला जाएगा। सो दिस इज द मोस्ट इंपॉर्टेंट गेम इन बैंकिंग कि मैं जिसको पैसे दे रहा हूं, बिकॉज अगर आप सीधी बात देखो, 100 रुपए आप लोन दे रहे हो, उस 100 रुपए में से करीब 8-9 रुपए आपका बैंक का कैपिटल है, बाकी सब आप पब्लिक का पैसा लेके दे रहे हो, ठीक है। वो आपको जो आपने जो पब्लिक का पैसा लिया है वो आपको वापस तो देना ही है, वो आप ऐसा तो बोल नहीं सकते कि मुझे नहीं, मैं नहीं दूंगा। और आप खाली 4 रुपए कमा रहे हो, राइट। 4 रुपए इंटरेस्ट इनकम पे कमा रहे हो। अगर आप प्रोविजंस के पहले देखो तो करीब 3.25 रुपए कमा रहे हो, और उसमें से अगर मैं अदर इनकम हटा दूं, अदर इनकम आपका करीब है 2% का 6.8 में से, तो करीब 4.7, तो 2 रुपए के आसपास ही कमा रहे हो भाई। अगर 2 रुपए में, मतलब 2 रुपए कमाने के लिए अगर आपने ठीक अंडरराइटिंग नहीं करी तो आपका कैपिटल डिप्लीट होना शुरू हो जाएगा, या प्रॉफिट कम होगा या कैपिटल डिप्लीट होना शुरू हो जाएगा। तो कोई भी लेंडिंग के बिजनेस में द मोस्ट इंपॉर्टेंट थिंग इज कि भैया जो मैं पैसे दे रहा हूँ वापस का कैसे आएगा और सही तरीके से आएगा ना. And you have to ensure that before giving the money.
Yeah.
Once you have given the money, then the ball is in the other person's court.
True.
So अगर आप ये देखो यहाँ पे ना, we can come back to here. ये जो ROA था इसका 1.4 पे स्टेबल है और लीवरेज नीचे आ गया इसका. सो 14 का लीवरेज जो था वो करीब 12 पे आ गया, तो ROE 19 का 17 हो गया. बट एट द बिजनेस लेवल दिस 1.4% रिमेन द सेम. अगर आप पूरा देखो, टोटल रेवेन्यू 6.1 का 6.8 हो गया, बट ये एक्सपेंसेस स्पेशली आपका प्रोविजंस बढ़ने के कारण ROA 1.4 का 1.4 ही रह गया.
करेक्ट.
सो इन मोस्ट ऑफ द बैंकिंग आपका जो पूरा का पूरा गेम होता है, फर्स्ट 5 लाइन में एक टोटल ऑपरेशनल एक्सपेंसेस इतना मूव नहीं करता है जितना प्रोविजन और ये नेट इंटरेस्ट स्प्रेड. Because giving out loan is very easy and it is a commoditized market. So right. You have to have a hold on your cost of deposits.
True.
मतलब आपके हाथ पे खाली कॉस्टिंग है आपकी, नॉर्मल बिजनेस में जैसे होता है. मतलब आप मार्केट में उतने में एक प्रोडक्ट बेच सकते हो जो उसका प्राइस है या बाकी कॉम्पिटिटर्स बेच रहे हैं. कॉस्टिंग आपके हाथ पे. Now, if you look at these numbers, these are basically just hold on, yeah. If you look at the nominal GDP of our country, roughly stands at for till FY23, it was a little less than 300 trillion, so more like 3.5 trillion to US dollars, and the growth has been meaningful. It was just we can see the blip here because of the COVID. Otherwise, on a nominal basis, we were growing at roughly 11 to 12%. The growth was higher from FY5 to FY11. Then the things really didn't happen at the domestic level, more at the policy level. So our GDP growth fell down. But if you look at the overall GDP, we are one among the top 5 GDPs of the world and growing at a good pace.
Yeah.
So in emerging markets, I would say we would be the one of with a decent sized economy, we would be one of the highest growing, fastest growing countries. And if you look at the similar growth was mirrored in your total advances and total deposits. Total deposits roughly stand at 180 trillion rupees. And the total advances currently stand at roughly 140 trillion rupees at the end of FY23. Okay, now this is a very interesting chart on the left side, left bottom side. अगर यहाँ पे देखें तो अपना जो FY05 से लेकर के 12-13 तक, स्पेशली 11 तक काफी केपेक्स हैवी साइकिल रहा. जो भी बैंक्स ने लेंडिंग करी थी, that a lot of money of it went to the industries, large industries, metal sector में, power sector में काफी केपेक्स हुआ था. That's why our credit to GDP ratio increased. But FY14 में थोड़े प्रॉब्लम्स आ गए थे, काफी असेट क्वालिटी में स्ट्रेस आ गया था, बैंक्स ने लेंडिंग कम कर दी थी एंड GNPs बढ़ गए थे. और उसके बाद इंडस्ट्री में कुछ केपेक्स, इतना बड़ा केपेक्स, लंबा चौड़ा केपेक्स आया नहीं. इट वाज जस्ट ड्रैगिंग अलोंग एंड द ग्रोथ इन आवर GDP was more supported by the retail sector. अगर आप देखो, by the services sector. And services sector को grow करने के लिए that is not a capital intensive sector. तो banks ने भी अगर आप देखो तो loan growth was driven more by the retail category. That's why credit to GDP ratio came down. Right? Are you with me, Kirtan?
Yes, very much.
And hopefully things should improve from here. Maybe a few quarters as we see that the capex cycle should recover given the things the way are. Now, if you look at, if you just, the first question, if you, when you ask कि अगर 100 रुपए लोन दे रहे हैं तो PSU Banks का शेयर कितना है, प्राइवेट का कितना है, so this gives you entire picture from for last 18 years. If you look at the start of FY05, the foreign banks had roughly 4.5 to 5% share. I'm looking at the credit market share, 4.5% to 5% market share in the credit, and that has been gradually coming down to less than 4% in FY23. PSU banks had more than 56-57% share in the market share, and that has been the nationalized banks, and this is excluding SBI. So you can say that the rest of the PSU banks had a market share of roughly 55-56%, slightly more than that. Now that has come down meaningfully. If you look at that, has come down to more like 35%, maybe 30%.
So where is SBI accounted for in this?
SBI is at the top part. If you see, SBI has maintained its market share, slightly improved from 22.5% to more like 24% here. This is SBI.
Sure.
So if you see the pie, the area which has increased is the private sector banks,
Sure.
which has increased. If you look at this distance, so
Sure.
this has increased meaningfully here. Right? Are you able to get me?
Yes.
Yeah. So in the credit market share, the private sector bank has grown faster. They have taken bigger market share from PSU banks. SBI has maintained itself, but yeah, apart from SBI, the other PSU banks have lost market share. Now we look at the deposit market share. So in deposit market share, if you look at the foreign banks in the bottom part, they are just a marginal player with 4% roughly market share.
Yeah.
The payment banks are almost non-existent here. If you look at the second blue color. And then we have the nationalized banks. Nationalized banks in the deposit market share were roughly 57-58%. Now they have lost market share, but it's better than the credit market share. Because deposit, while you're giving your money to someone, you need to have trust on someone. And nationalized banks, people have more trust on nationalized banks, especially in the rural areas, semi-urban areas, where they have a better branch presence.
Yeah.
And they are nationalized banks. They are owned by the central government, right? And if you look at the private banks, they have gained market share even in the deposits, but at a lower pace. And SBI has been chugging along. They have gained market share at the expense of other PSU banks. So if you look at, the biggest thing is that we think about foreign banks. There are 44 foreign banks, but they haven't done much in the last 17-18 years. They have lost market share.
Is there any specific reason why? I understand PSUs have lost, but any specific reason why the foreign banks have not been able to do anything?
Look, in India, you need to be present across in the urban markets, semi-urban markets, rural markets for credit and deposits. And foreign banks typically don't want to be there in every nook and corner of the country.
Correct.
They are more of corporate bankers and high-ticket items.
Sure.
Now, if you look at the credit growth, as I said earlier, till FY14, there was a very good period in India, and more till FY11. That is very much explaining the credit growth here. The credit growth was in 30s. Then you can see a downtick in FY09. It was more of a effect of the financial crisis.
Yeah.
Then if you look at till June 13, the number was above 15%, the credit growth. Then for a small time, there was a spike in the credit growth, but after that, it was a downhill till 2017, when things were really bad for the Indian banking sector. And then after that, they picked up. And as things were looking good, we were hit by COVID. The growth again came down, but Indian banks were really very nimble-footed and very quick in raising capital, shoring up the capital base, improving their balance sheet. And the last 3-4 years, we haven't had any big accident which can rattle the Indian financial system. Indian financial system has been very robust. Yeah. So post from 22 onwards, the credit growth was really very good last year, which was held by a strong credit demand across sectors, whether SME, MSME, corporate, retail, and in the money markets, the interest rates were on the higher side. So more people came to the banking system to get money. And even now we are chugging along at 15% credit growth, which is a very good number if you see.
Yeah.
Now coming to the right hand side, the right chart, if you see, So typically 15-16% of the loan is given to agri sector. That hasn't moved much in the last 10 years. If you see 13 years, if you see the second painted area, that's the sky blue. That used to be a big number. That is the industry part, as I had mentioned along. That has lost market share, or rather they have lost a share in the banking credit because no big bank capex came in the last 10 years. And whatever, excuse me, and whatever loan has matured or were not renewed. So if you see the industry breakup has come down. Services was more or less similar with a small gain of roughly 2-3% in the overall banking system. But if you see the top painted area, the green one, they have gained the maximum. Their share was roughly 20% in 2010, and that's more like 30% roughly as of now. So the gain has happened in this area.
So one reason, of course, is consumption, which has gone up, and various innovations by lenders that has taken place in retail. But does this also have to do anything with the corporate crisis that we saw, because of which banks have stopped lending to the larger players, or corporate funding has gone down?
That is one of the reasons I would definitely say, but this will happen. Okay, I'll explain you two things. 25 years ago, nobody would have thought that the bankers would come big time in retail, right? But they had to come because everybody 25 years ago everybody was happy was doing corporate, because you get a decent yield and your cost to income is on the lower side, because you don't have to open branches in every nook of the country.
Correct.
You don't have to hire too many people, right? But considering the number of corporates we have, and considering the amount of or the number of banks we have, to keep yourself profitable, to grow, you will have to penetrate lower in the category.
Sure.
So now if you look at 10 years down the line, nobody thought that banks would enter the MFI industry. Now every bank, or rather most of the banks, have got some presence in the MFI industry. Because if you look at our population, our demography overall, then you have to go lower in the strata to have growth. Once if you have given loans to the industry, definitely they will have their economic cycles, they will have their sector cycles. But as a bank or as an organization, you need to grow year on year, right? You have got your employees, you've got your shareholders, stakeholders. So what do? You venture into areas which were not ventured into earlier. 25 years back, a housing loan or a vehicle loan was only done by NBFCs. Now banks are doing it much more than the NBFCs. 10 years back, it was only the NBFCs which were doing MFIs. Now all the banks are doing MFIs. Yeah. Right? Because the spread is better and you can grow. And if you look at, we have got 140 crore people and 65% of the people are still non-urbanized, right?
Yeah.
And if you look at the entire consumption of the country is managed, we have got roughly 25 to 30 crore households, and the entire consumption is managed by roughly 5 crore households. So there is a big scope below that. So people have to, banks or NBFCs will have to go in that area. They will have to go lower in the strata to grow. And as people understand more about the financial sector, as there is more credit discipline, we had CIBIL, we have now CIBIL, we have regulatory bodies for MFIs.
Yeah.
So all these things will keep on developing, and the risk will come down in all these sectors.
Sure, I understand.
Now, this is the deposit growth. The deposit growth has been laggard, more to do with the banks were not lending. They have started lending in only last 3-4 years, and the deposit rates have been on the lower side, and there have been financialization of the industry. So maybe 15 years back, people didn't know so much about mutual funds.
Correct.
People know about mutual funds. And now there are other ways to people invest in the various bonds of various NBFCs in various companies. So
Right.
deposit growth has come down. That's the reason. And if you look at the CASA, if you look at the total term deposit market share on the right-hand side of the chart. Again, if you see the PSU banks, which had 80% of the market share or slightly less than 80% of the market share in 2006, are roughly at now 50% market share. Sorry, at 60% market share. And again, the private sector banks have gained here.
Yeah.
And foreign banks have been just existing there. And if you look at the CASA part, now this is a very good story. CASA is all related to, especially CA is related to corporate and business banking. So the private sector banks have increased the market share in CASA big time. And savings account, they have also increased because private sector banks are more in urban areas, semi-urban areas, metropolitan areas, and not so much in the rural areas, where they have been able to garner the savings account market share. So they were roughly 15% of the market share in 2005. Now, if you look at them, they are roughly 30% of the market share in the CASA. So this is something we all are cheering about right now. The NII growth, which was hovering below double-digit numbers from good FY14 to FY18, has improved substantially, and now it's in the range of 12-13%, slightly on the higher side. NIMS is a multi-decade high at roughly 3.6% for the entire system, if you see.
Wow.
For FY23. And if you look at the same number in 16, 17, 18, it was roughly at 3%. So this 60 basis points delta has come in here. And operating profit has been quite volatile because if your NIMs are not, if your interest income is not growing and your cost is what it is, you cannot reduce the costs in the similar manner, but your interest goes down, then your PPOP growth also gets impacted. Now, if you look from FY16 to 20 to just before 20, it came down sharply in 16 to roughly less than 10%. Then because of the base effect, it increased to 20%, then came down sharply for 2 years. Then after that, it was on a stable state. It increased, and then it should be growing in a similar manner, not as high as FY23, but yeah, in a similar manner. So now if you look at the dark blue line here, the steepness, if you look at this, it was steep growth here, then suddenly it became slightly flattish from 16 to 19, if you look at. So your absolute operating profit didn't grow much. And this steepness increased only from FY22 onwards, if you look at this number. So this denotes the growth in the operating profits.
Are these profits sustainable with rates peaking out? Or, I mean, that's the word around whether rates are going to peak out or not, but
profits would be so far sustainable, I would see, because NIMs may be impacted here and there. But overall, if a loan growth is there and there's a good runway for next 3-4 years, I don't think should be a problem.
Sure.
The biggest delta came from this slide. Now, if you see the slide on the left-hand side, bottom part, the provisions of the asset quality, which was less than 50,000 crores till FY13, suddenly shot up to 350,000 crores in FY18. Can you see that number? So from in the last 10 years, as a country, we made roughly provisions of 23 lakh crores.
Wow.
From FY13 till FY23, we made provisions of 23 lakh crores, and the overall profitability of the system was in roughly 8 lakh crores. So if you look at the provision growth, you look at the provision growth here. So here it increased from FY11 onwards, but it kept on increasing, and this was an astounding increase. Thankfully, for the last 2 years, provisions have come down, and since we haven't lent meaningfully in the last 5 years, the provisioning should be contained going forward.
Correct.
Now look at the banking system part. So from FY05 till FY15, the PAT grew, but from FY15 for a period of good 1 to 5 years, the PAT didn't grow, and out of these 5 years, for 2 years we have a negative PAT.
Correct.
For the banking systems, and from the FY20 onwards, we started making profits. And this year, I guess we made the highest profits for the last in the last 2 decades, and maybe the highest profit ever.
Yeah.
Of roughly of more than 2 lakh crores, 2,08,000 to be precise, roughly, given the numbers. And the blue line is the credit cost, which was the culprit. It was chugging along at roughly 1.5%, 1.2%, shot up to 4%, the credit cost, and as a result, your ROAs came down. We were negative. And as the credit cost came down, the credit cost measures your provisioning amount, right?
Yeah.
Which you make for the bad loans. So good underwriting is most important. You don't have to do extraordinary, you don't have to make extraordinary yield, but you don't do bad underwriting.
Absolutely. Like you rightly said, it's a 2% business in which if you don't get your underwriting correct, you lose money, you lose capital.
Exactly. So yeah. So as the credit cost came in, the profitability increased, and currently we are making more than 1% ROA. So that has been achieved after a good 10 years, I would say. If you look at the numbers in FY14, 15, we were at similar ROAs. ROA is slightly higher in FY13, but yeah, we have come to the number of FY14, 15 right now. So for a normal business, we use for valuation, we use matrices of price to equity, or we concentrate more on earnings. But in the banking business or in lending business, we concentrate more on the book value.
Sure.
So book value is basically your net worth, your tangible net worth divided by number of shares which you have. And price to book is the matrices which we use for valuing the lending business. And not just book value, we also consider your return ratios, that's your ROA, ROE, quality of the book, in deciding what should be the valuation, price to book. So for similar ROE companies, but different quality of loan book, the price to book will be different. It is not necessary that if you have the similar ROAs in growth, you will get the similar price to book. But yeah, because the quality of the loan book may be different. And definitely asset quality matters the most in it.
If I have to...
That's from my side. Yeah, tell me.
Srini, just the last slide. So we are saying that while you definitely look at the ROAs, the net NPAs, the asset quality, the growth in advances and all of those other things, right? There was one Excel also that you shared on the 3rd page or the 2nd page, right? Which was an example of a bank. No, slightly further. One more. This one. So is this the framework that you first largely look at to decide whether a bank fits in and whether do you really even want to spend more time looking within the bank? Is this a more broader framework before you move to valuations?
Yeah, this is the first framework in which I come to know it's whether it's worthwhile looking to a bank, because I would typically look at 10-year numbers, or at least 5 to 10 years numbers की bank ने कैसा किया है overall cycle में.
Sure.
And आगे जाकर के कैसा लग रहा है ये बैंक, whether हो सकता है जो ROE नंबर आपको 19% या 18% दिख रहा हो, अभी किसी बैंक का 10 ही हो, तो साइकिल से बाहर निकल रहा है कि नहीं. And the most important thing to look at is कि वो yield spread बना रहा है कि नहीं बना रहा है.
Sure. So how would you differentiate between spread and net income?
Net interest income, you mean to say?
Yeah, net interest income.
As I said, spread is basically जो भी मैंने लोन दिया है उसका yield minus जो भी मैंने interest पे किया है उसका cost.
Correct.
ठीक है. And that, but आपके पास capital भी है जिसके भी आप lend करते हो, but उसका कोई cost नहीं होता है, right?
Correct.
So when I include that interest income, then it becomes NIM, net interest margin. So spread is basically the difference between cost of your yield on your advances and cost of your funds.
Correct.
But when you but when you include capital in that, then you get the
There's
NIM.
no cost of funds. So yeah, that's an advantage. Yeah. So the 0.2 difference between spread and the net interest income is the returns that I've made on my capital in very simple
Exactly.
language.
The more capital you have, the higher your NIMs will be.
Sure, sure. And I have this very fundamental question that I keep delving around, Ashwini, and your understanding or your feedback on that will help. Right? We typically keep saying that a higher PE company is expensive or a higher PB company is expensive in terms of valuation. But on the other side, there is another school of thought that the market is willing to pay that high valuation, right? So you have so many of these public sector banks which trade under their book value also. And if you talk about a bank like an HDFC or an ICICI or an Axis today that we are talking, are trading at much higher book values, and people are willing to pay that. So how do you judge between, or how do you decide whether what book value is fair to be paid to a bank?
I cannot talk specific, but I'll answer your question here. As I said, price to book cannot be found out in isolation. We have to consider the return ratios, the profit growth, the quality of loan book, asset quality to arrive at the valuation.
Sure.
And you have to see the overall kiska matrix is sahi hai, and the market awards higher price to book or higher valuation to businesses which are more stable and more predictable, rather than something more volatile in nature.
Correct, correct. So it is not justified to say that just because a bank is trading at a higher price to book means it is expensive and you should not invest.
Absolutely not. I don't think so. Not in my view. But it may be justified because of any other thing rather than we cannot look at price to book or price to equity in isolation. We have to look at with the other parameters.
Perfect. So what I understand from you largely as a takeaway is that, don't just look at the price to book because it might not give you the right understanding of the valuation. The valuation is more dependent on whether you are able to grow your advances well, whether your profitability ratios or return ratios are good, how good the quality of your book is, whether your gross NPAs or net NPAs are increasing, decreasing, whether are you lending more to retail, whether are you lending more to corporate. If you're lending to corporate, are you stuck on the wrong side of the cycle or not? So there are so many things that go into deciding whether the price to book that the market is offering to the bank at this point in time is really making sense or not.
Correct. Very correct.
Awesome. Super. Ashwini, thank you so much. I think this was brilliant. I understand that you can't talk very stock specific, and hence I'm not, kind of delving into too much stock specific things. But I think the larger framework on the fifth slide that you gave us with respect to what do you really look at, right? And this valuation part adds a lot of value to, I'm sure, everybody who's going to view this. While there are going to be a lot of questions that will come up here once this video is played out, right? I will try and answer as many as I can. But if there are a couple of questions that I can't, I'm going to bounce that off to you over a WhatsApp and, only request you if I'm not able to answer those, if you could spend some 5 minutes.
I'll do that. I'll
just come across.
I'll do that, definitely, for sure.
Awesome. Ashwini, would you be comfortable if somebody in the audience is asking us for the PowerPoint? Can I share the PowerPoint without making any of those changes?
I'll have to check with my compliance team, then I'll get back to you.
No problem. So I will not share it till the time I hear a yes or a no from you, and I'll avoid those questions in the comment section.
Surely.
Ashwini, it's been great. Thank you so much for taking the time and presenting this. I'm sure a lot of us in the audience, including me, have learned a lot of things that we were not aware of, the nitty-gritties or the very smaller nuances of banking as a sector and the way you really look at it. Thank you so much for taking the time out and making that presentation to us. And I hope I will see you soon on some another podcast, on some another topic that interests you. And we'll be very happy to have you as a guest again.
Sure. Pleasure is mine. Thanks a lot, Kirtan.
Thank you so much, Ashwini.
Thank you.